Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, December 30th, 2008. Well, as we get into today's intraday action, folks, I want to discuss a lot about the technical pattern formations that we've seen on the futures chart intraday today, and I want to discuss also on one other stock intraday and kind of do a little educational type analysis because we did a lot of that yesterday in yesterday's intraday video, and I really want to focus on that because the steps of building yourself into a pro trader or an experienced trader are all through understanding the chart patterns and what's going on in those patterns to really fully understand the overall market. There's a couple patterns on the futures intraday, and I also want to look at the Goldman Sachs chart because I also found some cool patterns in that as well. And we'll look at that. We'll discuss what the intraday market is doing currently and where we set up now for the last day or so of the year. Okay, so again, today you have today as a full trading day, tomorrow is a full trading day, and then that's it for the year. Now, Fridays the market's open after January 1st, which is New Year's, and then we'll go right into the weekend. So you're going to have light volume. We have light volume again today. You've had light volume for the last couple weeks in the market, into the Christmas holiday, into the other holidays, now into New Year's, and you'll maintain that light volume through Friday, on Friday as well, which is just a one day of trading between the New Year's holiday and the weekend. And also, you often have that carryover effect the following Monday. Now, you're looking at the intraday futures chart, and the market is stronger today after the Treasury came out and bailed out GMAC, the loan side of GM, General Motors, and they gave them about $5 to $6 billion in a bailout, taking a stake in GMAC, and it did really lighten things in the market. It really gave us a little bit of a positive bias overall in the markets today. And in tune with that, the Dow is trading up 125 points, the NASDAQ trading up about 27 points, and the S&P up about 13.5. Across the board, that's about 1.5% to 2% across the board. Very nice gains today, coming off a down day yesterday. So again, you can see that kind of wishy-washy nature of the market on light volume, where any little bit of good news will come out and you have generally an up day on light volume. Bad news obviously can be reactionary and be a down day like we saw yesterday. Now, you did have some various economic reports on housing and stuff like that today, but nothing of major consequence as the market is shoving away negative news and focusing on the good news into the light volume end of the year. Now, a couple patterns on this, folks. You can see we're currently live. This is live charting right now as I'm making this video, so I haven't really looked at anything until now, and I just want to look at a couple different chart patterns here. First of all, here's the market in an overnight session, and one thing I do see here is that you can see overnight you had this little bit of a parabola with a little bit of a loop in here, kind of an upside down little loop. And what you can see is that's the resistance point, all right? And I want to just draw that in right up here because what you want to really focus on is you have that type of dip in the market in general, and again, we're looking at overnight data right now, so it's very light volume, but you are going to have resistance at this upper point, and we actually charted it out on some different time frames, and this was a key resistance area as well. Now, what you had here was a fall. And the fall in the market led us to around 7:30 a.m. Eastern Time, early in the morning, before you had an updraft. And what about this updraft I like is that the move came right into a moving average crosshairs. And what do I mean by that? Well, something called a necktie or a bow tie, where the 20 moving average and the 50 moving average were crossing. That's where you're going to have your resistance point. And what type of pattern is a longer pattern on the downside with a shorter sideways pattern on the upside? Obviously, an in spirit of bear flag pattern, which generally indicates another move down coming in the market. Also, when you mix in the bow tie or the necktie right here of the moving averages crossing, in general, that is another point. And sure enough, the fall does come right around the opening in the markets. We dip into that 10 o'clock time frame, and what do? We pierce the 200 moving average, which is this line right here on the 10-minute chart, and bounce back up. We do not close below, we do not confirm below, which means it's an indicator of a positive bias now taking shape. In addition, you talk about multiple indicators or multiple time frames, and remember, in the money stocks, we focus on price, pattern, and time. That's how we read these markets so accurately, because we combine our analysis, our proprietary calculations, understanding pattern, price, and time, and are able to come up with this stuff, and this is part of it. Alright, so you have a pierce, you do not confirm, you have a tail there, you close above. It's also in the shape of a little bit of a V here, but nonetheless, you have a move up then that starts. And notice the time, 10 o'clock reversal time. Key reversal time for the markets happens at 10 o'clock. Sure enough, the market starts to move up at that 10 o'clock time frame. So you have multiple things there. Not only the 200, not only a tail coming in here and not a close below, but also the 10 o'clock reversal time will signal a possibility of an up move, and sure enough, up we go. Now the move takes us back through here, but look into the resistance point we go right into. Right into the top of the last move is right where we go. Notice here, I draw a straight line from the high of this candle where we opened all the way across. Even though we pierced it a couple times, you never got a close above and you never got confirmation. That means generally you'll have a pullback in the market. Where does the market pull back to? Sure enough, to the 20 moving average. Now again, what's this pattern formation? You can look at it a couple ways. First of all, you can look at it as a possible in spirit of head and shoulder pattern with a little bit of a break right there. Sure enough, you get a close later on above that and a confirmation, and then you see the next move up. That's a very nice pattern right there. And again, at that point, you see consolidation into this later session, which we're doing right now. We're trying to break up. But again, notice how key the moving averages are here. Notice how this market comes in. You actually bounce off the 20 right here, bounce back up, then you come down, pierce the 20, but you settle right on top of the 50 moving average. So there's so many little pieces of the puzzle that you need to understand. Okay, so many little pieces of the puzzle. Now today we see oil trading lower on the day, and we had talked about that in yesterday's Research Center. And by the way, folks, if you don't join the Research Center, you're just nuts at this point, because the calls have been dead on and continue to be dead on. And we give key levels, key turn dates, pivot days, a couple other odds and ends that we'll go over in today's Research Center that I called for yesterday. We'll see if they played out, which I do believe they did. And you can check out that stuff as well. But nonetheless, here's your intraday analysis. Beautiful intraday analysis on today's chart pattern. And you can even see that little bit of a head and shoulder pattern there, even though it's in spirit of. It's not a true head and shoulder pattern. Well, you could look at it as like that if you use this straight line as the head and shoulder pattern. So yeah, sure. We'll throw it in there as a true head and shoulder pattern because it's close enough to being the exemplary pattern that we like to see. In any case, guys, light volume today continues. Let's do another market check here as we're going to go to the Goldman Sachs chart and quickly look at that as well. But the Dow is up 121, the NASDAQ trading up 26.5, and the S&P up 13. Now let's talk a little bit about Goldman. And the one thing I wanted to point out on Goldman here, and Goldman's very strong today, and again, Goldman Sachs known as a market leader, is that on the gap up on Goldman today, you knew it was going to probably be a sell initially, and you can see the downdraft first of all here with a pierce of the 200 again. Now why? Well, number one, take the high from yesterday's pop here and just draw it right across. There you go. Alright, so you gap up right into this resistance area. You get a sell-off. Where does the sell-off take you? Takes you to gap fill, which coincides with the 200 moving average here. So gap fill 200 moving average, which is good support. You even get close enough to the 20, and then you pierce it and you do not close below, just like the market didn't. And sure enough, from that point on, you start to rally the rest of the day. So a good little intraday analysis there on the Goldman Sachs chart about, basically guessing that you probably fill that gap on that gap up because you're gapping right into resistance. All right, gapping into resistance, you always have a fair chance of pulling back off that resistance point and possibly filling the gap. Last but not least, we can touch on the USO intraday, and you can see the USO has been all around, but actually gapped lower here, went down, made a nice bottoming tail there as well, and has recovered a lot of it as we've gone into the close on crude spot oil. Nonetheless, we are down on the day on crude after 2 solid up days. Alright, folks, that's all for today. But again, I do encourage you, please go sign up for that Research Center. It is amazing stuff. You will blow your mind away with the analysis in that Research Center. Also, don't want to forget to keep mentioning the webinar on this Saturday at 1 p.m. Eastern Time. Go sign up for it at inthemoneystocks.com under Education, Webinars, and Seminars, the tab there. You can sign up on that website and attend on Saturday at 1 p.m. Eastern Time this coming Saturday, January 3rd. Take care, folks. Have a wonderful day. We'll be back with tomorrow's intraday analysis.